All right, good morning, everybody. Welcome to our special budget meeting. It's a special day in January. I'm just going to make sure we've got some good sound here. Good morning, Director Casely. You just unmuted. How are you?
Yeah, good. How are you this morning?
Good. Thank you.
Nice and clear.
Can you hear me?
Oh, good.
Oh, sorry.
Thank you. Go ahead, David Off.
Yeah, can you hear me okay, Chair?
Sure can.
Yeah, and I apologize for the outfit. I just got into my house here 1 minute ago from a rally, so that's why I'm decked out the way I am.
Not a problem. You're dressed. It's good. If you can mute, Director Gordon, Hewitt, Lockwood, you're all good for sound. Thumbs up. Awesome. Thank you. And Director Lunn, is Lunn online? Oh, there she is. Good morning. All right.
Good morning.
Well, let's start. Good morning. All right, we will begin by acknowledging and respecting the traditional lands and Indigenous people within whose traditional lands we are meeting today. I will ask for a motion to adopt the agenda. Move, second hand. Any hands up? You have an addition. Thank you.
Late item.
Late item. What is the title?
I want to introduce a late resolution for AKBLG called the Local Government Business Software Working Group.
Okay, 1 second. We have a sound issue. Director Lockwood, you can't hear us. You're good? Okay. Director Page is proposing a late item. Did you hear that, Lockwood? Just repeat it.
Yeah, it's called the Local Government Business Software Working Group.
Okay, so it's a motion.
And it's an AKBLG resolution.
Thank you. So this requires a 2/3 vote. We don't talk about what the content is. We just say, do we want it on our agenda? All those in favor? Anybody opposed? Okay, that passes. If you can add it as the last item, Carly. And now a motion to adopt the agenda as amended. Moved, seconded, further discussion. All those in favor? Opposed? Carried. Okay. Now we have Yev, our CFO in the room. We'll have some other staff presenting as well. Yev, over to you.
Thank you, Chair, and good morning, everyone, and welcome to the January 2026 special budget meeting. We are about a month ahead of where we were last year in terms of having a consolidated budget and having reviewed most of the core services already in the fall. So we have a presentation which will, if we can go to the agenda, next sheet, please. Next slide. A bit of a overview of RDCK budgeting. So many of you have seen this before, and just for interest of those in the public, we've included that in the agenda today. A look at the 2026 assessment and taxation summaries. Overall, it was for 26. We have a slide on the main changes from fall of 2025 for those budget presentations we've already done. And then we'll discuss 3 services, Regional Fire A107, 9/11 Emergency Services, and then finally Asset Management Service A122, which is a new service for 2026 and going forward. Okay, next slide, please. Okay, just a preamble, bit of a disclaimer again. This is still a draft budget, especially being a bit earlier in the year. We still have a fair amount of year-end adjustments to do, which will impact items such as prior year surpluses. Reviews are ongoing both at the staff level, committee, commission level, board level, and director level, as well as the outcome of this meeting and other meetings will drive changes to the budget. So we are about 2 months away from budget approval, which happens in or adoption, which happens in March at the March board meeting. Next slide, please. So a bit of an overhead of the budget review process. So this slide has changed for the first time probably in 3 or 4 years. So we have items that come directly to the board, budgets that come to committees and commissions, and that are, specific to that budget, whether it's rec or resource recovery. And then we have local service committees. So we had the addition of a Spokane Valley committee last year, which is working well. And so there's a group of services now that's being looked at that table. And then we have some budgets that are reviewed by directors and participants. So that's just a bit of the overview of the where budgets are reviewed. And again, March 19th, at that board meeting is where the final budget will be adopted for 2026. Next slide, please. A quick overview of the regional district. So one of 27 RDs in BC, 11 rural areas, 8 through K, and 9 member municipalities, 186 services, mainly Parks Rec, rural fire protection, resource recovery, waste, water utilities, building inspection, GIS planning, and transit. Each service stands on its own, which differs from municipality. Each service receives its own funding, and a shortfall in one service cannot be offset by a deficit in the other. So we basically have 186 separate services that we account for individually. And just some statistics down there. So just over 300 full-time equivalent employees, almost the same number of volunteer firefighters, and just about 63,000 residents as of 3 or 4 years ago, and covering an area of 22,000 square kilometers. Next slide, please, Carly. Okay, so we'll jump into a bit how annual property taxes are calculated. So the actual tax requisition amounts to fund each service are determined through this budget process. And then separate from us, the BC Assessment Authority, which is a provincial government authority, determines the property assessment values. And then individually for each service, we take the required tax requisition and divide it by the assessed value. And that comes up to property tax for each individual service. So again, differing from a municipality, there isn't one overall rate that's applicable to the RD as a whole. That's not how it's calculated. It's calculated at the individual service level. Next slide, please. So this is a graph we put up every year that shows the annual assessment change, and the blue bars are the 1-year change, so year over year, and orange is the 10-year average. So as you can see, the 1-year changes have come off quite a bit off the 10-year average, except for Area G. Area G, its 1-year change is equal to its 10-year average, just over 7%. So it's the highest by increase in property assessment values this year by a fair margin. Then F is next with just about 4%, and then the lowest is actually a reduction in Area I, almost 2%. And so quite a wide range there. So just about 9% range from the highest to the lowest. But if you look at the orange bars, there's maybe a 4% difference over the 10-year period. So a bit of a normalization across the RDs and municipalities over that time frame. Oh, next slide, please. So this slide just explains a bit about the what is in the draft financial plan package that's on the website and attached to the agenda for this meeting. So I think I know where we're at now, just about almost 300 pages, and it's broken out into the 3 components below. So the first sheets are the taxation details by area and municipality, and it shows the taxation changes over a 3-year period for each service for that area or municipality. And then we have a summary slide that compares all the areas and municipalities, the change in assessment and the change year over year in taxation. And then the individual detailed service statements for each service follow that. And one piece that's not on this slide is the very end of the package. There's an all accounts report that shows the totals for each account in the budget. And next slide, please. Okay, so this is the a bit of a truncated version of the summary report from the budget package. So it shows a net change, average change of 8.7% across the RD. Again, a really wide range. Village of Slocan with a increase of just under 2% to a high of around 12% for areas G and H, of about 12%. And so that's after the non-market change. So what non-market change is the addition or renovation values of new construction or renovations. And so I don't have a comparison here last year, but last year we had about I believe almost a 3% average non-market change, and we've gone down to just about 1. So that speaks to that does affect the net. Definitely has an effect on the net change for taxation. Are there any questions on this slide?
Yeah, I'm not wrong. Just let me pop back. I'm just checking in. Sorry, yeah, the presentation, I'm on the wrong agenda on the website. The presentation was in the addenda, which was published on the website. I know it's on eScribe, but it is on the published agenda as well on the website.
Yeah.
Yeah. Okay, great. Thanks, Carly. Director Hewitt, have you been able to locate it?
It's attached to the very beginning of the agenda on Scribe.
Okay. Okay, that was the question I had. I just want to make sure everyone can get it.
Click on new business, and that's where it is.
Okay, it's under new business. Any other questions? Directors online. Oh, Lockwood, please use chat. I'm sorry, I see you now, but I appreciate chat when we have a presentation. Go ahead.
Thank you, and I'm trying to, my computer, the RDCK computer is not working very well this morning.
Okay.
Don't know why, so I'm trying to get into it and I will keep trying.
No problem.
Can I just get Yev to explain what market value? I know what it is, but there's people on the line that don't. So can I just get him to explain what that means, why it changes within the year?
Okay, through the chair, thank you for that question. So I'll try to explain it a bit better. So what non-market change is basically new construction or renovation that adds that increases the value of assessment. So a market change in assessment is the value of properties changing because of changes in market values related to sales of existing properties. So if sales of existing properties, the values go up, and BC Assessment does its calculations, and say they go up 8%, then the overall assessment for that area or municipality goes up 8%. But in addition to that, if there's new construction or renovation activity, that's what is referred to as non-market change, and that adds and it increases the value, the overall assessment value for those areas and municipalities.
Thank you. Is a good way of describing it as gross change would be your assessment increase, your net market, or your non-market is the new builds construction. Okay, making sure I understand. Director McFadden.
Hi, thank you through the chair. Quick question, I think I understand, but what is D plus E? So on this slide, you've got, I know what A is, I know what B is, I know where you get C. Where is D and where is E?
Okay. Through the chair, so D is in the was on the truncated columns in here. So D is 2025 total taxation, and and E is defined area taxation,
Real good for questions?
which equals the total taxation.
Sure. Good. I don't see it else online. Please continue.
Sure. Next slide, please. So overall, quick summary, overall outlook for 2026. As mentioned on the previous slide, projected average tax increase for existing property owners is 8.7% on average, ranging again from that 2% to, and I misspoke, to about 15% for the village of Silverton. And so that's again based on the draft budget, which is subject to change. So the total tax requisitions for 2026 are currently projected at 49.9 million. That's in line with the $49.8 million that we had projected for 2026 in last year's financial plan. And so the CPI increase on staff salaries and director stipends 2.5%. With the union collective agreement, union positions, which are mainly in resource recovery and community services, is a 3.4% wage increase this year. And interest rates decreased a bit more last year, but seem to have stabilized. So they reduced some of the charges on our short-term loans, but will also be reducing investment income. Next slide, please. So jumping a bit to 2026 challenges and opportunities. I'm sure everybody's aware, we've got a bit of a challenging political climate right now with sort of ongoing discussion about tariffs and counter tariffs and on foreign trade. So that may have some impact on both our procurement costs and if there's an economic downturn on revenues. Fluctuating Canadian dollar, it's been going up and down a bit. That can cause an impact definitely on our expenses as well. And a bit of an opportunity, artificial intelligence. Again, it is evolving quickly, and use of ERD has increased, although not fully widespread. We did come out with a bit of a guideline for staff for AI usage, and IT is evaluating sort of the accuracy and privacy concerns before AI gets rolled out further.
Yeah, I have a question on that one.
Yes.
With hopefully not opening too much of a big conversation. Do we need a board motion to direct a policy for director use as well? And my consideration, we wouldn't do it now, I just want to ask. It would be important for me to understand how we're addressing it from a climate change perspective as well, in terms of use of water and all those things, and also the privacy is part of that too. So I'm just curious about, maybe that's a Stuart question. Would that require a board motion to direct?
Through the chair, yes, we currently don't have direction to do a board policy on AI.
Okay, I'll just flag that. Thank you. Any other questions at this time? Cunningham.
Well, thank you. Yes, I've been watching the Trump antics in the States, and it resulted in a change in the dollar because the American dollar has dropped on the world market, and correspondingly, our Canadian dollar is now up over 70 cents. For those of you who are used to a 66-cent dollar. How long is it before that kind of change takes effect on the kinds of things that we will have?
Through the chair, those day-to-day swings take a while for it to flow through. So we haven't analyzed and the exact impacts of it. So inflation has cooled. We're not seeing the same increases we've seen through the pandemic period. Having said that, there are certain items that are still in short supply or more difficult, sometimes more difficult to get. So we've had some small challenges, but I wouldn't say overall we've had a decrease in pricing due to that. One area that has stabilized, and I'm sure you've noticed, our fuel prices, are relatively stable or maybe have dropped off a bit. So, we're not forecasting large increases there.
Thank you.
Supplementary, if I may.
If it's related to something you can answer, yeah.
Yeah, no, that's all right.
Go ahead, Director Graham.
Thank you. I have a question about the number of services that the regional district has, because I've heard a number of different numbers over the last few years. So I'm always reluctant to in my newsletters to say like how many we actually have, because I've heard we've had like 200, I've heard we've had around 200. Today I'm hearing we have 186. So I'm asking, my question is like, are we confident that we have 186 services? And does that number include like dormant services? Because like, I'll give you an example, S207 shows up on my area east summary, but there is no budget in the budget book because it's sort of like a dormant service. So I'm just curious about that, if we know where we're going at.
Through the chair, yeah. So there, the actual number, I guess, of S services that have service established bylaws is right around that 186 level. The 200 includes the A services. So it's depending whether you include the A services or not in that count.
And can you just elaborate A being allocation? So it's not a service, it's just explain that if you can, please.
Okay, thank you, Chair. Through the Chair, A services are what we refer to as allocation services. So those are services where we, instead of varying costs and inside S services and allocating costs that are shared amongst S services, we pulled those costs out into A services. For instance, asset management is one. So instead of splitting the asset management coordinator salary between 40 services, we said, let's track all the asset management related costs in one bucket, and then we'll allocate it out of there. So then we have the transparency of what, for instance, asset management is going to cost. And then each service that gets allocated a fee will have one line that shows that more clearly. So it basically adds transparency for all of those costs that are shared amongst, or increases transparency for costs that are shared amongst the S services.
Thank you. And that was originally directed when we were talking about resource recovery, we wanted to see recycling and organics broken out of the big number. Further, Graham, Weatherhead.
Thank you. So our financial grant aid services are each separate service as well as counted in.
Through the chair, yes. Yeah, all the S services.
Thank you. Just comment, supplement that is that would make sense as to why that number seems so big. So we have a lot of folks. Okay, thank you.
Thank you. No other questions? Go ahead. Yeah.
Okay, next slide, please. So I'll go through about 4 charts here that in visual form help relay or show the financing of the VRD. So the first one is the 2026. It's a pie chart showing the 2026 tax requisition share by segment. And this basically shows where the taxation, requisition taxation based on assessed values goes. By far, the largest is rec facilities and community services. If you add up those first 4, about 40% is rec, community services, parks, museums, and libraries. And the next one, fire emergency management, about 22%, resource recovery 13, transit 6, and then admin and others make up the difference. So if you look at this, what's missing is water utilities and other utilities aren't here. So those have parcel taxes, and so they're not included in that. So if we were to add parcel taxes and user fees, then the rec and community services pie would actually grow. Resource recovery would grow, and then we would have a chunk here for water utilities as well. But this is just based on the taxation based on assessed values here in this pie chart. Next slide, please.
Jacqueline, go ahead.
Yeah, if I can take my 1 minute, 42 seconds to the public really look at this. If in areas A, B, C, and Preston, we wanted to knock taxes back by 1%, that's 1.4 million. And the only place we can achieve that without canceling some of these services, wipe them off the map entirely, no transit, or no this or no that, would be between recreation, waste management, and emergency services. We see where people don't want to buy a new fire truck and they could lose their certification, your insurance could double. So you might think we could try and save some money for you, you will pay more. If you look at recreation, most of our money increases these days, like Preston, is the ice plant upgrade. If we don't do these things, we could have a catastrophic failure. That means not possibly more than a shutdown. If we look at waste management, it's a risk management thing where we can say we'll try and squeeze the budget and defer major capital work a couple more years. There's risk. We're dealing with ministries, changing federal and provincial laws, things beyond our control, which can have big cost implications. But say we wanted to get that 1.4 million. If we zero-based no increase for waste or rec this year, put our ice plant at risk, for example, that's only 0.25%. That's only 1/4 of the way. Those two dramatic possible optional changes only gets 0.25% reduction in taxation across A, B, C, and the town. So for the public listening, if you think we can just shave a few percent, run in the fall for this position and try and work with staff and run these services against the face of reality. Because we're not gonna knock 1 or 2% off. I don't see any of these services where we're just gonna say, let's not do this without taking a serious risk on the downstream consequence. Anyway, this is the best slide I thought, Peter.
Thank you. Go ahead, I don't have anyone else on the list right now.
Through Chair, thank you. So this next slide is what is referred to as a waterfall graph. And it basically breaks out that requisition increase from 25 to 26 based across those segments to show where that total $4.4 million increase comes from. And the reason the waterfall graph is used is it shows both the pluses and the minuses all on one graph. So the largest increase, just point that out on here, is general admin, which we discussed last fall. Primarily that increase is driven by a reduction in prior year surplus, as well as not having stabilization reserve available to offset an increase. So we're showing a large increase there. And then the chart shows the rest of the increases here. Major rec facilities, fire, transit, which Director Jacqueline just discussed, and resource recovery, the 4 services that he discussed, and then the other services show smaller increases, and a couple services with decreases.
I have David Off and Boone. David Off, go ahead.
Yeah, thank you, Chair. Just a question through Yev. I think I know the answer, but I want to double check. Yesterday, we passed 2 motions at our board meeting that increased the general admin budget by $60,000. Has that been baked into everything you're presenting here right now? I think the answer is no, but is that 60,000 yet to be added? And then I have a supplemental question.
Through the chair, no, that hasn't been baked in. This budget is as of January 16th.
Okay, so
that
question.
will need to be added.
Sorry.
Go ahead with your supplemental.
Yeah, so supplemental is through to our CAO, through the chair. So basically, can those motions be reconsidered? Because it was a really interesting weighted vote that added that additional taxation. Is reconsideration possible during the budget process or today, or do we have to wait for another board meeting? So what is the process for reconsideration, Chair? Through the chair to the CAO.
Yeah, through the chair, that it hasn't been added to the budget yet, so you could move reconsideration. Staff hasn't acted on it.
Oh, sorry, Jer, I didn't hear that.
Through the chair, the budget has not been amended for that, so you could move reconsideration. Staff has not acted on that. However, you had to have voted with the majority to move reconsideration. So someone that voted in favor would have to move reconsideration.
Thank you very much. That's very clear.
Thank you. DeBoon, and then Jackson.
Okay, so yeah, the general minimum, and I looked at it for our local area, Preston Valley Services. This year's increase, combined was $224,940. So we know that we're replenishing surplus because we used it to put more taxes last year, correct?
Fair share, yes.
Okay, so had we not done that, it makes, now we have a bump in taxes to compensate for low rate taxes last year. And we had this discussion in council too. Is that always a good idea? Because yeah, you can lower tax for 1 year, but you're compensating and raising them to do that for the next year. So I have a hard time with it. And again, we have a lower increase this year in Preston, and partly because we say, oh, we got surplus, good. Well, you have to replenish those surpluses, and it's obvious here. And so when people look at this and they go, why is that such a high increase this year? And then we try to explain to them. You're smoothing out the bumps if you don't do that, in my opinion. And I think that we really have to be careful how we do this in the future, because those bumps are the ones that people object to most. It's not, if it's a gradual increase, it's fine. But if it's a higher increase because, oh, look what we did last year, we give you guys a break. It's not really a break. It's just a way to appease a few people that won't like that higher rate. And so I guess I advise against us considering that because of what the overall impact is and how people are actually accept that. And so, you know, this is an election year. So I'm sure a lot of communities are doing that, but it's not really wise fiscal management in my opinion.
Thank you. Go ahead, Jackman.
Yeah, thanks. And you'll notice this is the one of the chart that I left alone in my previous mini speech. So Director DeBoon said 90% of what's on our mind. We had $950,000 that we could smoothed over several years. We burned $750,000 of it. Guess what? We got a $1.1 million bump this year. The vast majority of the bump is exactly what Director DeBoon pointed out. We love digging holes, and then we've got to figure out how to fill them up. The other big piece of the bump is what I view as we're being forced to change how we do everything to do with computers. We don't own licenses anymore. We pay every year an annual fee. Nobody listening and nobody you're going to talk to in your community can say that, oh yeah, it's great now because I have to pay an annual fee for everything I do on my computer, Adobe or whatever word processor. Oh, I love that because it's always new. It is a cost. It's an ongoing cost. It's baked into ours. The only comment I have is what we're not showing the taxpayer is theoretically, I heard the word, there's efficiencies in these new wonderful systems of tracking time and projects and assets and efficiencies will evolve out of this. This is a 5-year target. And in that 5-year target, when do we start showing the taxpayer that we think we're going to be more efficient and require a little less staff or require a little less of something, a little less time and effort because of these efficiencies we're paying hundreds of thousands of dollars a year for now? Where do we see that projected over 5 years for our taxpayers to say, we're buying into this new age computer stuff because we might save you money later? We're not showing it anywhere. All the future years are inflated. At some point, maybe it can't be done between now and March. When do we and then senior management team sit down and think, are we going to derive efficiencies and set targets in our internal operations strategy year to get to those efficiencies and reduce some costs somewhere? That's what I want to see.
You're on the list, Graham.
Through the chair, I think it's a good question. And I think it depends on which software you're talking about. For the SharePoint migration, definitely. I think that's something that as we get into it, we should be able to identify where we're saving time, where we're saving resources. Our financial software and the Unit 4 going to the cloud, probably not, because we're getting the same product, right? It's just an increased cost to move to the cloud. So there's frustration for that one for sure. But the SharePoint work, definitely. We should be able to identify where we're saving time, where we're saving resources, not having, even if it's just part-time admin staff that we used to have on that we don't need anymore. Things like that, we should be able to identify that. Yeah.
Graham, can you put Cunningham on the list, please? Graham?
Thank you. So since we're talking about S100, I have a couple questions about S100. One thing that jumps out at me, and I'm just wondering if staff has had any consideration, is the short-term financing principle. Because I see from 2026 at 156,000, and in 2030 we're down to 15,000. So I'm wondering if there's any opportunity in terms of our lending to make any changes with our short-term financing that could result in savings for the, or less impact to the taxpayer. So that's my first question. And the second question is just things like, are we budgeting for a phase 2 organizational review in this fund?
Through the chair, the first question, so these principal related payments are related to current borrowings that we have. When we borrow for 5 years, we generally take the full 5 years to pay that off, and that borrowing is over generally the life of that whatever the borrowing was for. So to extend and borrow again probably is not something that we should pursue. And then the second question regarding the sorry, what was it?
Organization.
The phase 2. Yes, so we do have $100,000 in contracted services in this currently as a placeholder in this budget for phase 2. And I'll let CEO Horn talk about is there going to be a report coming in February?
Yeah, through the chair, the board will see a summary of that report in February. And I'd suggest that maybe you wait until that report to determine whether or not you wanted to make an adjustment to whether phase 2 gets completed or not based on the results of that report.
Yeah, supplemental, so we could reduce the budget by $100,000 is what you're saying.
Through the chair, yes, if you choose not to proceed any further with the org review, definitely.
Or we could borrow for it.
No, you can't borrow for something like that through the chair.
Okay.
No.
I'm gonna ask my question now and then Cunningham and then, because I want to build on what Director Graham was stating. I got a couple questions. First one, could we borrow for SharePoint? What would that bring us down?
Through the chair, yes, we can borrow for SharePoint. So we're looking at that option. So similar to the org review, we'll have a board report coming in February regarding the SharePoint project. So we're just finishing up the pilot, which is going relatively well. So we'll have information there to bring forward the report. And one of the options will be looking at spreading the cost of the implementation through borrowing is one of the options that we'll be considering and potentially recommending. And as well, currently the budget has about $155,000 for the SharePoint implementation. So based on this pilot, it'll give us a realistic view of what we can realistically do this year. So that number will likely be adjusted down a bit, and potentially borrowing also be recommended, which would reduce this budget anywhere from $50,000 to $150,000, depending if we borrow and to what scale we implement this.
Okay, great. So that'll come through as one of the options on the report in February. So kind of two flags for me with S100 is possibly borrowing on SharePoint could reduce it for 2026. Yeah, that's the year we're in. And then the other one is the organizational review. My question on that one, and I'll just state, I'm pretty sure it wouldn't qualify for community works either because it's not infrastructure. Okay. It's good to know. I think it's important to get the report before we make any decisions on what we do with the phase 2, but that to me is one of the, it's a difficult one because I think if we saw really good recommendations in there, but we didn't move forward, but we did all the discretionary stuff we did yesterday, that's kind of one of the things I will want to see, I will be considering in February in terms of balance. What I wanted to indicate in terms of response to what Dr. Jackman was saying was the other aspect of efficiencies or lack thereof is as we increase technology, which, you know, in one way is efficient, in another way, debatable, the level of downloading that occurs and how much, like, I sent a letter to BC Wildfire Service the other day, basically saying when they had a one-day engagement, no, like, please stop with the amount of stuff you're requiring of us. We are used as administrative bodies without first asking, do we have the capacity? The grant work to keep up with what they ask us to do, they being the province, is a whole other job to keep up with. So just to my colleagues, as we move into who knows who will be here next year, the political will on that advocacy is so critical. And I don't want to ask staff to quantify that, but in some ways, I would love to see the ability to quantify what is not discretionary anymore versus what was. And the ability as a local government to be responsive to our communities is less and less, because you got to buy a fire truck, you got to do the water system regulations. Like there's all these things that are so expensive that that discretionary piece for community response just gets smaller and smaller. So that's just more my little platform. But I was going to say we should quantify our advocacy. I'm not going to go down that road right now, but it is when I think of often how much time, like water systems, 15 years minimum, 20 years probably, on what the regulations are for water and what it actually costs to put a water system in. I will stop there because there's no valid questions for you yet, and we're focused on budget. Cunningham and then David off.
Thank you. Well, first of all, I noticed, and I suppose most of us have, AI is pervasive, and I did an upgrade 2 days ago, and now AI is in everything. And I got to block it out so it doesn't do things like. It doesn't explain the fact that, guess what, my fire budget went up by 25% last year, over $100,000. Why? Because the cost of fire trucks went over COVID, right? Went from $500,000 to $1 million for the same kind of unit. And I explained that to by the way, I didn't get a single complaint when I explained that to the taxpayer. They all understood that, yes, that's a very good thing. The fact is now in 5 years, we will have it, we'll be in the same position as we used to be, although it's just costing us more to do it, and nobody's fault except whatever. But you see what the AI says about those kinds of things. And suggesting, well, you should try this. No, yeah. So anyway, I just thought I'd point that out. And I looked at the numbers where Area T was, well, how come it's the same? Well, it's because there was a 25% increase in fire protection costs, and that in fact does changes it from 2% or 4%, 8%. I think the big thing is explaining it, good regular explanation, so people know exactly what's happening.
Thank you. David off.
Thank you, Chair. Just first a general question through the chair to our CFO. In terms of when we speak with constituents and we have meetings with our ratepayers with respect to budget increases and things like that, what assumption or what number did we utilize in terms of it, like for inflation throughout our budgets? And I already received a question about like what do you think is going to happen with the budget? I says, well, I believe that I didn't see the numbers yet. I believe that there will be an inflation adjustment, and I'm just wondering what number, like did we use 2%, 3%, 2.5%? Like what assumption did we make in terms of inflationary increases, and what would be a reasonable answer to say, well, in every budget, like we built in probably a 2 or 2.5 or 3% inflationary increase. Is that a question that you could answer through the chair?
Through the chair, but 2.5 would be a reasonable number. It's not the same across every expense. We've got some collective agreements that have some higher increases and utilities and other things. So yeah, 2.4 to 2.5% is probably a good number to use. Okay,
supplemental, Chair.
Yes, go ahead.
Okay, and then given what we heard yesterday at the board table about the use of community work, or the ability to use community work funds for wildland vehicles, have we done a deep dive into every fire service, particularly in the, for the rural directors, with respect to what could be funded by community works funds and what needs to be funded through requisition? Or is that something that each director needs to do separately with the CFO through the chair?
Through the chair, generally at every fire budget meeting, we do bring up the opportunity to utilize community works funding. So depending on what's eligible or not, we do discuss that.
Okay.
Go ahead, Stuart.
And through the chair to Director Davidoff, we only got that letter 48 hours ago. So we haven't had time to do any further deep dive into the budget regarding that. Yeah.
And Chair, I have another, but I'll defer to other directors before I ask the third question.
Go ahead with your third question and then we'll go to Devon.
Okay, so I did a calculation last night and in our rec facilities budget and our service S222, there is one item that I know I'm going to get questions on, and that is there's a $280,000 allocation for a project, for planning for a project that Area J and the city want to do, and we've gone through all this, and I voted no all the way through this process, and I did the calculation based on the percentage, the 14.5% that Area I contributes to that service S222, and basically 2% increase. 2% of overall taxation increase, $40,000. It's 1% for every $20,000 in the Area I budget, is based on the city and Area J charging this service $280,000 to do some planning for a project that they want to do, and as I posed that all the way. But the key thing is that the comment was everywhere, oh, if the referendum passes, that will be repaid. My question is, what happens if the referendum fails? And then is Area I going to be compensated $40,000? And I have asked for them to fund this out of community works funds, out of any other place they can, instead of
Dr. Davidoff, I don't know that staff have that question. It's a political question, but we'll ask them, and then otherwise it should go to your sub-regional table. So we'll ask staff if they can answer that question.
I have a process question. Is there any means by which that I could make a motion for reconsideration of, like, I voted against, so I guess I can't do a reconsideration. Like, I know Director Vanderberg asked a similar question at some point, like, I don't know if that is even possible to revisit, I guess, to this. I'll ask the CAO, are we stuck with that 2% increase in Area I, $40,000? And is there anything we can do about it? Because that's what I'm already asked.
Through the chair, I think that's as the chair mentioned, that would be a discussion at your sub-regional table regarding that. There's nothing in legislation that would allow you to do something different right now. Chair, Joe's got his hand up. I'm not sure if.
Oh, sorry. Go ahead, Joe. I don't see you. Oh, you're right there. Go ahead, Joe.
Through the chair, even if the commission was to say, no, we're not doing that project, that actually doesn't change the requisition at all, because the project is being funded from the dedicated funding that the commission has set aside for capital and asset management. So it actually will not, so it's just really important to understand that it won't change the amount of taxation. What it would change is possibly a contribution to reserve or something like that. But that commission has a very disciplined approach to funding asset management and capital projects, and it's inside that funding. So it actually wouldn't impact requisition. So that's just important to understand.
Thank you.
Yeah. Thank you, Chair, for your patience. And this one's a tough one for me to address with my constituents. Thank you.
No problem. Daboom, go ahead.
So we just talked about CPI, and there's an assumption among our ratepayers, and it's been expressed by us. CPI is 2.5%. That should be our tax increase because we're compensating for CPI. but then they don't factor in the fire trucks and all the other things. And so it's a complicated formula, but we need to have a municipal CPI. So that shows that this is why it's not 2%. This is municipally, it's never going to be CPI because that's only part of it. And when we try to explain this to the public, it becomes complicated to them and they reject that because it's, in their mind, everything should be based on CPI. And our expenses are not based on CPI. Only our wages and certain part of it are based on CPI. So we need to find a way to correctly explain this to people that your tax rate is not 2.5% because of this. And if we can take that and apply a formula to all that we need here and say, this is the municipal CPI instead of just your basic cost of living, it might be easier for people to understand.
Thank you. I do have McFadden. I just want to know, when it comes to communications and our public budget meetings, I'd like us to hold that kind of like, this is what I would like us to elaborate on when we get to the conversation on our budget meetings. When it comes to communication to the public, we are not simple. And when we try to simplify it, we're actually missing some of the info. So it's a combined effort to be like, here's your services and be very specific about what's changing. I go by service to say, you're getting a new fire truck, you got a new planning process. So I would like us to be encouraged to work with staff as co-communicators in this process. And also let's hold those kind of thoughts around how we want things communicated to when we discuss, I don't even know if it's on our agenda, when we do the public budget meetings, we'll make a space just to talk about communications. And staff is noting stuff. Sorry, McFadden, go ahead.
Thank you. My question's somewhere in between the two of where we're at and where we're going. So I'm gonna ask it anyway, not trying to go above what you just said.
No problem.
Okay, have we ever considered when we do that to actually get a municipal index? Like I know at the city we do, so we don't use CPI, we actually get a municipal index increase every year and that's built into our budget and that's pulled out saying, okay, this is what our actual, and it's always different. And we've done that, I think it's for the last 3 years, and it's actually been extremely helpful for us to see what percentage is actually just because the amount that we're paying for different types of things that the public isn't paying for. So although groceries, housing, all of that, which is CPI, what the CPI is based on, isn't something we deal with. We deal with the insurances and piping and different types of things. And so that gives you a more proper index that you're increasing all your budgets by. That is based on what our expenses are and helps the public and ourselves to really understand that. And I know that there is that number, that there is organizations that do that pretty good cost of labor. So have we looked at using that as one of the tools that we're basing some of our communication and budgets on instead of just CPI?
Through the chair, it's something we consider, but we haven't dug deeply into. And it's a little more complicated than just saying, oh, this item costs this much more to today versus that. We also have the complications of increased regulations and increased demands about how we run our resource recovery facilities, how we run our fire departments. So there's a true and real cost that we have to operate differently in today's environment than we had to 10 years ago. So we would have to factor in all of those sort of activity increases as well, not just that this pipe costs more, this fire truck costs more, which are a large component of the increase. But there are other factors that we would have to I think somehow show as well.
I think the fact that we're rate per thousand and by service makes that a bit where it could get too nuanced. But I really appreciate you two raising that because I didn't know municipals do that sometimes. We just can't bucket things in one. So good question. Okay. Please proceed. Yev.
Next slide, please. Okay, so we'll jump from looking at requisition breakdowns to or breakouts to expense type breakouts. So for 2026 non-capital expenses, wages and benefits, largest one, 38%, services 18, and then going down from there, debt services and reserve contributions 13. And a question might be asked, why isn't capital included in this? The reason being that we double counting because reserve contributions and debt services are towards future capital, so that would be double counting on here. So that's why it's non-capital only on this pie chart.
Yeah.
Next slide, please. So next slide is a waterfall graph showing the increase in non-capital expenses and how it's broken out. So increase of $4.2 million. The bulk of it being reserve contributions, 3.6, which is mostly through resource recovery to fund future capital works. Wages and benefits up mostly by inflation, 1.2, maintenance and miscellaneous. And then on the other end, we do have some reductions in a few expense types as well. It's interesting, and it's a bit of a coincidence that increase in expenses of about $4 million is very close to the requisition increase of about $4 million, but it's not an exact one for one. Some of these items here are being funded by prior surpluses. So it's actually a bit more of a complex calculation. It's not exactly one for one, but this does show where our expenses are going. And if you take out reserve contributions and just look at between wages and benefits and grants, the actual overall increase in non-capital and non-reserve spending is fairly low, somewhere just around $1 million.
Jackman has a question.
Thanks, Jeff. I did raise 2 points, not just for us, I guess, but for the public very much. You say, well, why such a big reserve contribution? Why such big increase? Okay, whatever the CPI is, 2.4, 3, 4, 5%, we're way above that. And that amount we're above that in part is not because of the cost of doing this year what we did last year. It's the cost of what we failed to do the last 10 years. We failed to recognize 20 years we've had closed landfills up in the hillsides that whoever operated under an old system that we now have to pay to clean up. And everything else that we did over the last 10, 20 years, we budget for it, we put money aside for it, and now we are forced to do some of this under how the rules change. The other side, I'm happy to see the grants trailing on, because to me, and the chair spoke to this 15, 20 minutes ago, it's become a bit of a trap. Here's free money. Oh, let's do this. Let's go down this rabbit hole instead of doing, say, planning. Planning has a job to do things we're supposed to do under the Local Government Act Community Charter. Next thing you know, half the staff are chasing grant money to do something the province wants to know about for free, but it's not, because the grant doesn't cover the staff. Staff cost goes in the back to the taxpayer. We gotta be really careful about chasing grants, because every time we chase a grant, comes in new obligations that, oh, now you did that, let's make you do this. It's something that's gotta be pushed back. I would love to see the province do their own work on so many levels. We saw the feds give money trickle down to the provinces trickle down to us to take care of all the landscape emergency issues. That should have stopped at the province, but they let all their staff go. They don't have people working in bush in the field who can climb up a mountain the way they did a decade ago or 20 years ago. So they let us do it because we're closer to the people. And we should be saying, no, guess what? You should also be close enough to the people to do your own work. And then people can complain to the provincial government about their tax burden, which happens to be heavily in the deficit, whereas we're not, and then deal with it there. So I love to see the grants tapering off, and the reserve is stuff we failed to pay attention to for decades. So this is maybe the second most illuminating slide out of the slides for the public to try and balance out their head. Why we are not increasing our cost by CPI. That's one.
Thank you. I do want to note on the grants, I don't have anyone else on the list, but I do want to note the one place that it's been really strongly communicated on behalf of this board is in the EDMA provincial working group when they, there's gonna be a lot of new requirements, and they said, well, we'll make sure we have funding. All of us at that table have said, grants are not free for us. They take time. And so just as a shared advocacy piece for all of us, UBCM, FCM, wherever we are, if they're talking about, well, don't worry, we're gonna give you some money for it. When they want to take over the fire brigades, $10,000 a year. That was, no, thank you. We can't do that for that price. So I think it's an important piece for us as politicians to be continuously advocating. Just because you give us a little grant, it's not free and it costs a lot, and do your own job.
And Chair, the public doesn't know, EDMA is Emergency Disaster Management Act, which is a whole great new thing that we have to now comply.
Yes. Okay. Focused. Here we go. I don't have anyone else on the list. Go ahead. Thanks, Kim.
Okay, next slide, please. So this next slide, at a high level, summarizes the change in requisition for these 6 services that we presented in the fall. So we just go through them. We did talk about earlier about S100, but we'll so a relatively minor decrease, some up and down items, but 0.7%. But having said that, this requisition will be going up. There was an increase that was missed in the budget for, or not an increase, but a requisition amount for rental of the Preston Education Center. And then as well as the items approved at the January board meeting are not in the S100 budget either. S111 rule at MIN, it had $37,000 for utility services in not in the correct account. The actual amount should have been 75, so it's shown in the correct account, but the previous amount was not removed. So there's about a net $37,000 increase will be from what's shown in the fall. GIS shows a $33,000 increase with some wages and a reduction in project fees. That will be reduced in the next revision of the budget. It is likely we're going to remove that co-op student from the budget, and there's $46,000 in 5-year surplus that will be applied. So that will actually be a decrease from what we showed last fall. Building, small reduction in wages. Vehicle costs shows that decrease. To note, the other big change in the building budget, it had a $275,000 5-year surplus that was not allocated in the budget. So in the current budget revision, we've added it to 100% as a contribution to stabilization reserves, because that stabilization reserve was largely used up last year, and putting those funds there would also increase alignment with current revenue recognition standards. Planning, small reduction there due to reduction in contracted services and salaries. And emergency management, there was no change in the budget.
Jackman has a question.
Yes, thanks. And through the chair, you have just answered part of it. S103 prior year reserve, because we're showing it would have gone down. Stabilization reserve going down to around $47,000. Again, part of that the previous year got ourselves a hole we had to dig out of. And that's part of why we have the appearance of a surplus. It's just if you dig yourself out of a hole in 1 year, it looks like there's more money in the next. But my concern here is twofold. Our net stabilization reserve, should we look at some kind of a smoothing formula for that? Like, I don't know where else to have the conversation except here. Well, can't do your rural because building inspection involves many villages. And then the second question is whether or not professional reliance is going to change things there. Do we have any handle? And I guess that may be in part answering this question. We need that much of a stabilization reserve, building inspection. Will the professional reliance model cost us money? Do we have any handle on that from the building department yet? If we get into disputes, because there's this dispute thing that somebody says this is okay and our building inspection department is a little bit uncertain about qualification of why that approach is taken. Has any of that been factored in yet as to our future impact on staff? Because right now our costs are going out to the field, reviewing clients, getting work done, review element work done. So is there risk there, and do we have more in our stabilization fund than we need? And those two things are working against each other.
Yeah, with that, you'll take it.
Through the chair, I'll take the first part of the question as far as the amount of the stabilization reserve. So the consideration that we might want to consider is there is actually an accounting standard that talks about how much of your revenue you should be deferring and should have in a realistically have in a reserve. So we did those calculations, and for financial reporting purposes, we're basically saying half of last year's revenue should be set aside, and that's what our auditors have accepted this. So the auditors have given us some runway to get there.
If I can on that,
On that one, and then you wanted to.
I thought one of the calculations was 25%. We had this conversation with Autumn, he was sitting here as our auditor. As government, we have a different formula. I know our building permits are over 3 years, but in past years, we're spending a huge amount of effort dealing with backlog. So it'd be nice to understand, what is the backlog today? I think we're being a little more efficient. Things get 2 years old with no action on a file to coming into compliance, notice on title, we move on. So these are the bigger questions that I'd like to see us smoothing ourselves out in the building service. And I thought 25% was the recommended reserve for that kind of operating service, but maybe this is different. This is 3-year permits.
Yeah, through the chair, this is different. This is over the timeline. The assumption is that the revenue is earned equally over the term of the permit. That's the accounting assumption.
Deferred.
Yeah. You can only record a third per year.
Very little to do here then.
Yes, but that being said, it's on consolidation, so there's no impact on the service. It's not as if, for example, this year we had $1 million worth of permit fees. It's not as if we have to take $600,000 out of the service and then replenish that with taxation. We're allowed to keep that cash as this on a service basis there, but on consolidation, we've got to defer 2/3 of it. And with respect to, just through the chair, regarding the legal side of things, we do have a separate reserve in building inspection for legal. So that the stabilization reserve does not need to support anything that might come up on the legal side with respect to the professional reliance. We do have something separate for that.
We know, does that, through the chair, does that show up like in this court? We see a reserve. Is that legal reserve published somewhere else? If we used a lot of it a couple of years ago. In 24.
Yes, got that number.
Through the chair, there's $54,000 currently in that reserve.
And that's not in this book.
Can we take that one and give it to you?
Absolutely.
Okay, thanks. So I've got Lockwood and Graham.
Thank you. And I apologize. I think my computer buttons are sticking and that's why I'm not able to. So I sometimes put up my hand, but I keep trying chat.
No problem.
Through the chair, to Yev, about the GIS, as we know that Nelson will be coming out of this, and I see that, you know, we're going up in that. What is the plan? Because 33,000 right now is a little amount. In a couple of years, it's going to be a greater amount. Have we started this year, knowing that in a couple of years, Nelson isn't going to be in there, started to figure out how we're going to supplement that service or change that service in whatever it looks like.
Yeah.
Yeah, through the chair, we are looking at what the demand might be with Nelson out of the service. Unfortunately, we don't think it's going to be significant. The systems are the systems. And if there was significant project work that Nelson was requesting, we were actually building separately for that because it took time over and above what the core service was. So we are looking at where we can reduce some costs in GIS, but I don't anticipate it to be significant.
Okay, so supplementary, please.
Yeah.
So with that thought, are we looking at, so right now, 33,000 this year, are we possibly looking at that much? I know this is a guesstimate, but as we see where GIS is going, are we looking at that between that and say 50 each year going up? Or like I'm building,
Director
we don't know
Lockwood.
what's gonna be built, but GIS, we kind of know where it goes. So I'm just wondering if there's any possibility of, is there something that we should be putting a little more in this year in reserve, is I guess where I'm going with it, than having huge amounts a couple of years from now?
Go ahead.
So through the chair, I think the 5-year plan is relatively representative of what the costs are looking like in GIS, and there's not a significant jump. The big thing is the software in GIS. Whenever there's a large software update, we've got a relatively big purchase, and you can see that there's one in 2026 this year. Next year, we don't have it, and then there's an expectation that there will be another one in 2028. So you can see that on the contracted services line, where there's a $40,000 purchase in 26 and then a $40,000 purchase in 2028. But we're looking to keep this service relatively stable from where it is right now in terms of costs.
Okay, thank you.
So, and just to note, I thought it'd be helpful, and Stuart did mention it, when you look at S102 and the 5-year financial plan, you can see those projections. Of course, they will adjust, but that's where you can see what that looks like, and it's a bit more detailed in there. So S102.
Is that in our last year financial plan, or is that something that has been presented?
It's in the agenda today and the draft financial plan.
Okay, I can't seem to open that one yet, so thanks.
Okay. Graham.
Thank you through the chair. This is timely because my questions are on S102 as well. My first one. So my first question is 2025 to date, like what date is that 2025 to date in the column for the full report? What are we looking at?
Through the chair to date is all the accounting entries as of last week. So that would include everything in December, but we're still going through finalizing accounting entries, so that number will change over the next month.
Okay, so supplemental, it looks like we did go over budget in our salaries in 2025 from the plan, and but what's more concerning to me is the 2026 plan was 365,000 in salaries, and now we're at 482. Did we hire someone? Like, what happened here? Because this is over $100,000 in salaries from the plan from last year to the plan for this year. Did we hire?
Yeah, go ahead, Stuart. Can you start?
Don't say it gets.
Oh, sorry. Go ahead. I thought you wanted to start. Sorry.
Through the chair, there is 18,500 in there for a co-op student. We can remove that. And then there is 11,000 in there for admin support. The GIS team did that strategic plan last year, and that was intended to look at how we can service the organization. And the GIS manager has established a steering committee, and there will be admin needs for that as well as for customer service. So that is about 11,000, but 18,500 is for the co-op, which will be removed. So that'll bring the salaries down.
Stuart has a bit more to add to that.
And through the chair, one of the things that wasn't contemplated last year was the impact of the Next Generation 911 GIS staffing needs. Some of that's covered by a grant. You can see that in the 2025 plan, we had a certain amount coming in to GIS's revenue for transfers from other services. That's gone up by a little bit because there is some support coming in from fire services to support that transition. But that program of the Next Gen 911 was not fully contemplated in the budget last year. And that's put a lot of pressure on us. And that was partly, yesterday the board approved that application for the $100,000 grant. That will again support some of this. So this might be amended depending on whether we get that grant.
May I?
Yeah, go ahead.
Another question, if I jump over to S104 since we're on this, the appropriate place to ask. I'm just curious in S104 why we would have had $7,000 in overtime that was not planned for.
Sangeeta?
So through the chair, that money, that amount of money is to cover costs for admin staff to host the APHC meetings partially. And we also use overtime to do a few mail outs, so it sometimes takes more time to do those things. There's one recently was for the OT to cover the cost for the local conservation fund, for example. That money has been recovered from that service to cover the cost for the local conservation fund mail out. So this will all balance out once that money has been transferred, which actually was done the last few days. So that'll reduce the overtime number won't change, but there's money coming in to offset some of it.
No.
Okay. Sorry, I'm not on Zoom. Are we good on Zoom?
No.
All right. What's your next? We could either break now or keep going to 10:30. All right. Go ahead, yeah.
So now we'll jump into A107. So Dennis again, who's the interim general manager of emergency management and fire services, wasn't able to be here today, so he's prepared this slide. So we'll go through these slides today. So A107 is a newly resurrected allocation service. These costs used to live in S101, rural administration, and for sake of transparency, we pulled it out and created and reused A107 so we can show these costs and track them outside of S101. So there's 5 work orders in A107. There's one current capital code, and then a general code for fire services, SPU, which relates generally to wildfire deployment. And then we have 2 large grant programs in A107 that are used to track those grants in the budget.
On this slide, David off?
Yes, Chair, sorry.
Go ahead.
Okay, so question through the CFO through the chair. Does the command vehicle replacement and the SPU structural units do those qualify for Community Works grant funding?
Through the chair, generally command vehicles don't, and we are doing an evaluation of requirements for command vehicles in this and other fire services. So we do have that there as a placeholder pending the hiring of a new potential hiring of a new regional chief. But no, generally command vehicles do not qualify for Community Works.
Stuart had something to add. Go ahead, Stuart.
And through the chair to Director Davidoff, the command vehicle is part of our fleet management, asset management plan. So it comes from reserves and funds have been put away since we purchased the previous one a number of years ago. That being said, I am talking to Dan about the true vehicle needs for fire services and how many trucks we actually need, how many vehicles we actually need, and what types of vehicles we actually need. So although this is in the budget because it has been planned for, I think this is the 3rd year it's in here. I think it's been carried forward for that long because Tristan and I were having the same discussions. This might look differently by the time we get to the point where we make a decision or come out altogether, depending on where we land.
And on the SPUs, I'm pretty sure we're not purchasing more SPUs. It's just an account for them. Is that correct?
Yes, through the chair, there's no plans to purchase any additional SPUs at this time. Right now, that deployment fund reserve is used to support repairs and maintenance or equipment replacement on those units.
Yeah.
Okay, thank you.
Go ahead.
Thank you.
That was
Thank you, Chair.
Okay. Is it okay if we get to the actual budget piece and then we can get into details? Because we're kind of talking advance of looking at the budget. Go ahead.
A 107 again, because yes, it was on the SPU, because as they age, the cost of repair, maintenance, upkeep increases. At one time, Canyon was pulling out some of the revenue separate, because that's still the case. Or is it all lumped together now?
No, through the chair, Canyons is still separate, Canyon Listers is still separate.
And they have a separate accounting then for their own repair, maintenance, and the like of that.
Yes, through the chair, it goes through their service, it goes through S-130 or whatever Canyon is, yes.
Perfect. And then I kept getting the argument before we needed 4x4 F-350 full crew cab trucks in case they had components being used somewhere. And it sounds like that message is maybe, no, we don't. Because in the future, it may well be the province that supplies all of that. So
Yes, and through the chair, we definitely don't. The other benefit is during a very busy season where we need to haul something like that, we can rent it during the wildfire season, and then that's covered by our EAFs, and we don't need to put it through taxation. So
I do see you, David, off. I think it's important to note that SPUs were ones that we were being contracted out to use, but they don't do that near as much. So they're not as of an interest for our fire services because BC Wildfire brings in their own. So that shifted from when we first started acquiring SPUs. David, off, go ahead.
Again,
we're into the budget. Let's let him get to the budget.
Yeah, just last question, Chair. On the SPU units, if we're to purchase a new SPU unit, does that qualify for Community Works grant funds? Through the chair.
through the chair, that's a good question. We might have to follow up with UBCM because if wildland trucks do, then the SPU might fall in that category. I don't know if they would consider that. It's got wheels, so it's rolling stock, but it can move on its own. So I'd have to check on that.
Thank you very much, Chair. And that's the end of my questions on this.
Thank you. All right, then please move into the budget. Thanks.
Okay, next slide. So this next slide breaks out the 35 services that pay into A107. So the RDCK run fire department, the contracted services, some money going to rural admin and emergency management. So $1.1 million budget is broken out as shown on this sheet.
I'll ask a question. The deployment income of 50,000, we're not using that to, where does that land in terms of, does that go into reserve? Because it's kind of a false, we don't bank on that. That's pretty ad hoc that we would get that. Where does that land in our budgets as income?
Yeah, through the chair, that's either goes to reduce the regional fire services overhead in the year that we do have that deployment after the individual departments that were deployed get their share of cost recovery. Any additional amount is put through this. And remember correctly, last year there was a bit of a surplus, and there was a board resolution to use that to reduce taxation last year. But this points to sort of an interesting point in years where we do have high fire activity. We actually have an opportunity to reduce taxation because of that. Counter side being we're really busy and we'd rather not have fires than have reduced taxation. So in years where we have reduced fire activity like we did in 2025, we have those $50,000 not now available to reduce the regional fire overhead allocation of it.
Thank you. I'll just add to that I think that's an important consideration when we have these, that it should be treated the same way we treat a surplus or something, that it's going to falsely reduce taxation unless it's actually just covering increased costs. So I think that's an important thing moving forward as we talk budgets, that we're not using that to reduce taxation that then gets replicated the next year. It's the same thing as S100 use of stabilization and surplus. In addition to that, that is not the same as the EAF reimbursements we get for costs of EOC. So those are more like costs incurred, revenue paid. And BC Wildfire deployments are separate from that. That's a different thing. I'm just clarifying.
Yeah, through the chair, the deployments we get, there's an hourly rate for any staff that go, and there's more or less like a blue book dollar for apparatus deployment. So if we send a tender out or send an SPO, there's a daily rate that we get paid. And then the halls that are sending staff or apparatus will recover some base costs and they'll be able to pay their staff. And then the general overage of that will go into S101 to support the SPU program.
Okay.
But does not have any restrictions on it.
No, I think it's a side moving forward that it should move into either a reserve, capital reserve or something like that. So it's just again flagging that when we reduce taxation because we get a bonus that year, we have to pick it up the following year. And so I'm keeping that thread going. Okay. I don't have anyone else on the speakers list. Go ahead.
Next slide. So general overview of A107. So 32% increase in fire service fee, and split between the 16 RD fire departments increase, primarily due to $106,000 of general admin and IT fees that previously stayed in S101. I'll talk a bit about that. So when general admin and IT fees were charged to S101 before, they were charged as a lump amount. They weren't broken out between bylaw and fire and directors and everything else. And so they stayed in S101 and now we pulled in A107. They're in A107 now, they need to be allocated to these fire departments. So the residents are, instead of paying for those fees through S101, are paying for those fees through the fire departments now. And residents who didn't have fire protection before are no longer paying for these fees. $70,000 in salaries and benefits increase for CPI and new duty officer standby rates. We put in as a placeholder $12,500 for a regional fire chief hiring related expenses. This relates to moving, advertising for recruitment, and then as well as new gear. About $4,000 related to some GIS services. And one other note is we're waiting for potential recommendations from the organizational review and also reviewing the service as a whole, and that may impact the actual fire chief related costs in 2026.
Director Hewitt.
Thank you through the chair. And sorry, I'm going to go back to the previous slide if I can. I just was looking at comparing some numbers here. Under contracted services, you've got all the search and rescue or Jaws of Life services with contributing to contracted services. But I don't see that line item on any one of those services that are listed, 150 to 156. Is that buried somewhere? Or is that just, it's grabbed wrong numbers?
So through the chair, Director, I think we probably just used a term we shouldn't have used because that shows up in the budget line item, but the contracted services refer to services that we contract out. So their Windle Fire, Canyon Lister Fire, all the search and rescues where we provide a grant or a payment to a society that operates that service on our behalf. So that's what those services refer to.
Okay, thank you.
Yeah, go ahead.
Through the chair, I'm looking at the current budget and for instance, S152 has an amount, Jaws of Life Creston transfer to fire services account 59707. There is an amount for the cost of A107 on that service, as well as the other all these search and rescue services. So I'm not sure if we were looking at a previous version of the budget that didn't have that.
I was looking for the words contracted services.
Yeah. Okay, thank you. Okay. We're at 10:30. Was that the end of your? Oh, Director Lund, you have a question on this slide?
Just one quick, and just flipping back to the previous slide. So the RDCK fire departments, it looks like there's 1, 2, 3, 4, 5, 6, 7. 8, 9, 10, 11, 12, 13 listed on that slide. And then the next slide, it has 16 RDCK fire departments.
Through the slides, through the chair. So the difference would be, and is those are actual services, and the 16 should be actually fire halls. So we have some services that have multiple halls.
Yeah, I'm quite aware of the Spokane Valley one with 4 halls. So I'm just curious why it would be through halls and not services.
Through the chair, so each hall is that, that was the allocation that it selected, because each hall is considered to require the same level of attention as any other hall.
So they're still services, they're just a different type.
Yeah, it's just go ahead.
Yeah, through the chair, it's just allocating costs based on the demand of service by a hall rather than a service as a whole. If a service has 4 halls, I think it makes some sense that it would require more attention and from regional fire than a service that just had 1 hall.
Okay. And is there a method? Never mind. I'll go offline. But just curious, might like some more analysis on that, just in terms of allocation of time potentially. In theory, I understand, but it does have a burden on the Spokane Valley Fire Service.
Through the chairs, as part of the review of regional fire that we're looking at, we are looking at how that is allocated, and not just amongst the RDCK fire services, but all the services identified on that slide.
And that there's an actual formula or the metrics that are used to determine that at this time. Can you share that with Director Lund?
Through the chair, that's just done on a per fire hall basis
at this time. Okay. Okay.
Awesome. Thank you.
You have a question on the fire?
Yes.
Go ahead.
Yeah. When I look at the numbers, and I'm glad that Director Lund brought that up, is there are more than 16 fire halls rather than 13. Like when you take a look, there's 4 in area H and there's 2 in different other areas or whatever. So when you add them all up, it's more than 16 from my addition, or am I doing it incorrectly?
Yeah, through the chair, I'll need to confirm that number. This was the first draft of the slide. We do have more fire halls somewhere under contract, so the 3 or 4 halls in the Creston Valley are not. So there's different numbers that are thrown around. They're not part of that 16. So we will clarify that number, but I think you're correct. We're probably a bit higher than 16.
Yeah, and supplemental like that. There's 2 in the Terrace and the Burnett area, and there's 2 in Balfour. So when I do the math, it's a little bit more than 16.
Yeah.
Okay, thank you.
Sure.
Okay, we are going to take our morning break. And Stuart's already figuring out that. Thank you. We'll be back in, let's go for 10 minutes. There's 60, the others are contracted. Right?
There's 60 calls.
I'm not.
Yeah.
Yeah, it's.
It was 15, wasn't it?
No, it was 2.
Okay, thank you, Director Lockwood. So directors online, we do need your cameras on to note your presence. Thank you, Davidoff. We know Director Hewitt had to step off for a few minutes. She'll let us know when she's back. Director Lund, are you present?
Probably not till 11, so.
Okay, thank you. Thank you, Kaisley and Gordon. Great, thank you so much. All right. Let's roll. So we are, where are we at? Yeah. Just keep going.
So next slide, please. So the last slide is finishing up A107 Regional Fire Service Overview. So this is the detailed breakdown of the budget for A107 between the regional costs and then the two grants, and then the SPU costs for 2026. Showing the revenue from the various services, a transfer from reserves to fund the capital expenditure, and the rest of the detailed costs. And then as well as the funding for the two grants, which are pending approval.
Great. Between screens. Okay, do you have any questions on this one? My apologies. Yeah, I gapped. There was another slide. Oh, Graham, go ahead.
Yeah, I have a question. Like, I noticed there was no 8107 regional fire service page in the last year's budget. And I also noticed there's no numbers in the 2025 budget, so it's a new service.
Through the chair, yes, a service. We pulled it out of S101.
Okay, that's what you're saying. So the whole thing, so it never existed at all.
Correct.
And so then my supplementary question is, why haven't we populated the 2027 to 2030? Or the one that had to do things
Through the chair.
it's just not updated.
Good.
It's in the financial plan?
It's there.
It's in the financial plan in the draft for today's agenda.
Okay.
201.
Through the chair, yes, it is, yeah. The anomaly appears there, we've only put the grants in, those two grants in 2026. So it appears that, we don't put in the future grants, we only put in the current year's, grants.
Okay.
Good. Thank you. Good on Zoom. All right, please continue. Yeah.
Next slide. So jumping onto S156 911 emergency communications. So an increase in taxation about $30,000 over last year, mainly driven by rising costs and some declining revenue. The two main costs in this are the contracted services for 911 and dispatch and fire dispatch. And as well, which we talk about, I think every year, is the reduction in 911 user fees from landlines. As landline use is reduced, the user fees are reduced, and mobile 911 fees are not collected yet in BC. And there's four expenditure increases, primarily again driven through for those contracted services, and some increased costs for GIS to for the integration of that 911. And then four capital projects are planned for some infrastructure replacements, and the asset management plan is underway to identify future reserve contributions.
We have Cunningham, DeBoon, and Vandenberg. Jack, and you're on that list too. Go ahead, Cunningham.
Thank you. Through the chair, we presently work with Fraser Fort George for dispatch, and we have in the past consulted with all the people who provide that kind of dispatch. We started with the deal, and then we've been around the market, and we continue to serve the market to see, because it seems to be that once we hook up with somebody for dispatch, about the time they get really good news to us, we change to somebody else. But the cost, because the cost has changed for dispatch, the same service is considerable between the various services. My question is, the chair, are we continuing to serve or to survey? We have a 5-year contract on this one, isn't it?
Go ahead.
Yeah, through the chair, we do. In terms of continuing to survey, I think Fraser Fort George is actually building up their infrastructure to be the go-to dispatch provider in the province. We did originally, when we left KB and they stopped providing that service, we did split the RD and went with a different service provider and Fraser Fort George at the same time. And that second service provider did not provide the quality service that we wanted to, which is why the entire RD is with Fraser Fort George right now. So we're quite content with the service level, and we don't think there's a reason to, outside of the contract term, serving the market to look to go somewhere else right now.
Thank you, yeah, we do need to keep an eye on those things, because it seems to be, we come in at a low level, and then after that, it goes boom, 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 keeps going chaos. And the service level remains the same, so I'm glad to see that we can continue to do that. I wonder if we're gonna drop the rate when we get close to the end of the term. Okay.
DeBoon.
Yeah, because we know that, there's a resolution through UBC, collect the fees through cellular network, so we will have that yet. If we're successful, would that mean, that would subsidize it? We wouldn't have to tax for that as much?
Through the chair, yes, when I arrived at the regional district, that TELUS revenue number was $190,000.
And we're, do that note, just friendly reminder, we took this to the province this year at UBCM, as a board, maybe for the third or fourth time. And, Vice Chair McLaren was just looking at the response, which we know we got, obviously didn't indicate anything structurally different, but we're just gonna quickly check that response again. I do know it's a federal thing that the province had to work with the feds on. So they did want us to, reiterate the advocacy to the federal government as well. That's what I recall from it. McLaren was looking it up. Okay, maybe December or October, I think would be too soon. Vandenberg.
Great, thank you. We touched on this yesterday a little bit, but I don't know that I made the complete connection, and that was the invitation, I think it was, for residents to register their properties so that it can be on the GIS system. Now, did I understand that to include occupied and vacant, or just vacant, or everyone? So my property, I'd have to make sure that I take the time to actually register to make sure that they can see me in a GIS system, which I can actually see myself when I pull it up. So I'm a little confused as to, I might have missed something there. To what extent do we need to register?
Go ahead.
Through the chair, it's dwellings only, it's not vacant land. It really just, you're thinking about emergency services response, so whether it's police, fire, ambulance, even somebody to be able to find your house. And we do have a number of properties throughout the regional district where they've just looked at the number at their neighbor's place and looked at the number, they picked the number in between and smacked a sign down. We don't have that in our system, right? So if there's a call out to that address, you've got someone in Fraser Fort George who's trying to look it up in a system, and it doesn't exist.
Okay.
So it's about completeness of the data and making sure that people have applied for, they're subdividing, you're making sure that you're applying for an address for that second dwelling so that emergency services knows where it is.
I didn't realize that was a real thing.
Yeah,
We
yeah.
picked a number out of the air and stuck it there.
Yeah, no, we provide addressing for rural areas in the region, in the regional district.
Got it, thank you.
I could take you on a road tour if you want. The other, just one second, Weatherhead, I've got a speakers list. Can you put Weatherhead on it? The other thing Michelle had indicated yesterday from GIS is that if you want a vacant lot registered, they can do that, but just recall vacant isn't emergency services. Fire will be registered in other ways. Yeah. So speakers list, Jackman.
Cool, thanks. Yeah, so this is one where we told the public a year ago, we had suffered 6.7% lift, so we can buy equipment and do all the stuff, get ready, and then it would go back down, going up. So on the advocacy, I can't read too much into conversations, right? But I had a sense that the province has a target to start this cell phone recovery, and that it's kind of underway. And I think we really strongly need to flip back to not saying, well, they're waiting on the feds or CRTC or whatever. We really truly need to get directly back to the province and say, when and what are you doing with this? Because this is upside down from what all the objections are. So hopefully, now I know there's a special resolution, AKDLG being added to our agenda, and we're silent on this issue. When I came away from UBCM, I was hopeful there was something in the works. Should we remain silent? How do we make our voices heard? These are perfect numbers to show the province. This is just going out of control. The wrong people are paying for the service.
Okay, I'm gonna keep going through the speaker list. I do have the response from the province. Graham.
Thank you. So through the chair, I just pointed this out to you because we had $100,000 in transfer from reserves last year and $100,000 this year, but apparently we didn't use our $100,000 last year because we didn't have that much in reserves. We only had 128. So does that get adjusted from the 2025 budget if we didn't use it?
Through the chair, we didn't do that capital work, so we didn't use those funds.
So it just moves into.
So we just delayed the capital work to this year.
Leatherhead.
Sorry, this is not really budget related, just related to 911, if that acceptable, Chair?
If it's brief and concise, go ahead.
Okay, just the, if there isn't a civic address during an emergency, how is it responded to? Meaning if it's somewhere that is not related to the house, then how does 911 respond?
Depends on if the local team can know who they are.
Yeah, through the chair, it would be a case by case basis and how,
Yeah.
I don't know what Fraser Fort George, what their process is if an address does not pop up on their system, because they don't even know which hall to dispatch or to call to see if they even know what it is. So I don't know the answer to that.
Okay.
It ends up being the emergency responders on the ground, either know where it is or they don't, and they've had to do that. They've been like, oh, that's Joe down by Barb. Okay, great, I'll go over there. That's how it, yeah. So you want your address registered. So just before Cunningham, I did want to indicate what the response from the province was. They commissioned a report on ECOM 911. It came back with 17 key findings and 26 recommendations focused on improving ECOM's governance structure. 25 of the recommendations are for ECOM and 1 is for the province. So ECOM's a separate entity. And so this is where the complication comes in. The second report outlines potential service delivery models and options for a government role in emergency communication services in the future. They're reviewing the recommendations. That's the answer. Cunningham.
Oh, thank you, yes. With regards to the question of my mate here, that they take it from the cell tower, that you to get a general idea of the area.
Yeah.
And then, and in our case, they call the fire department, they listen, you know what's on, so you got to call for. So, Chair, the problem with this is that many of our cell phones here, locally, are registered in Alberta. We have Alberta numbers. And it is a federal thing under the CRTC, so it should be a nationwide type of thing. And my question is, are we doing anything with to get the feds off their butt? Because that's actually who they're the ones who have to say, listen, there's a 25-cent levy per month on every cell phone that's registered. And we get that money. That would be perfect.
Okay.
And that has been before us for a dozen years.
So thank you. Yes, that was the response from the province. Please reiterate it to the federal government. So when we get close to when there's federal government meetings, which we don't get, we'll find a way to do that advocacy. Director Hewitt's on the line as our FCM rep. She's aware of it. So we'll work on the channels for that. Not at this moment though.
No, I understand. I just want to make sure that this is being done because
yes,
otherwise we'll be volunteer between whatever, forever.
Okay. Please continue, yeah.
Next slide, please. So the next slide is regarding the new asset management service, A122. So there's a report AJ put together for that was attached to the agenda, and so AJ will speak to this slide and to his report.
Sure. Well, through the chair, thanks for having me. I actually hadn't intended on being here today. Instead, our management coordinator was supposed to be here, but I believe that Stuart filled in yesterday that that individual who was lying. So, I guess you got me instead. I'm sure you will look through this and read this, but I'll just do a really quick kind of overview. 2025, I think we find will be developed and establish some momentum with asset management here in the RD. What we have and what we started last year being developed, 3-year trade map, that's kind of in Rev 2 right now. You'll see it hopefully in the next few months. Shortly, we're going to be undertaking a business need analysis so that we can figure out what our requirements are for our asset investment planning software that we're planning on proceeding with. We are currently working on an RFP for building and facility condition assessments for the phase 1, for the priority ones that need to be done earlier on in the year. That's a little bit ahead of schedule. For Q3, we're planning on putting out the RFP for the AIP software. And then for Q4, that's really, I guess, the kind of the meat and potato of when we plan on having all the BCA, the SCAs done, and software ideally purchased and ready to start implementing and using it. I guess the core thing there would be that it will be used for informing the 2028 budgets. Things can obviously happen quicker, but we don't think we'll have that in place for the 27 budgets. One of the notes that I did have is just that there is a staffing commitment, internal staffing commitment required. So depending on the different departments and how much assets and infrastructure and inventory they have, it'll just be, I don't want to say it's a burden, but it's going to be, we really need our own internal staff to assist us with reviewing building and facility condition assessments and making sure that we get this inputted right and get it done properly the first time. And then I guess last but not least, I think senior management and myself have tried to, I guess, allocate costs to services based on locations, number of assets, insured values, so we've kind of apportioned up the costs to who will ideally get the most amount of benefit from this overall asset management program. So last but not least, I guess the budgets and schedule, we've kind of laid it out in this report, ideally what we think is reasonable and feasible and practical. That being said, now that we've lost our coordinator, some things might get reprioritized, or might get rescheduled, but really we're going to try and keep the momentum that we've established and keep it going forward in 2026.
AJ, could you speak a little louder?
Oh, sure.
Please and thank you.
And sorry, that was all I was going to say.
Oh, okay. No problem. And was that the only slide for this? Yes.
This slide and the second slide was the budget.
Okay, great. Thank you. Jackman is on the list. Go ahead.
Okay, thanks. Through the chair and maybe AJ or whoever. I thought we had a strategy where we would hire a key position, and that person largely would work with all of the other people we have across our spectrum of assets, rec complexes, water systems, whatever, fire services, who already have a pretty good sense of our assets to develop these plans. Now I see the injection of 300,000 plus of contracted services. It's making me very nervous. When I've asked like foolish questions, perhaps like, we put enough aside for the Creston Library. Well, the asset management evaluation wasn't done yet, or this and that. Well, when it's going to be done, well, the consultants are behind. I have heard the consultants are behind on this type of work for a couple of years now, well over a year. So now everyone else is also doing this. So how reliable is this projection that we're going to be able to bring a consultant online, them understand this, get a bid that will no doubt push the $300,000 envelope because they can see, hey, we have $300,000, put it in the back pocket and not do the work. I'm very concerned. And what I'm concerned about is the consultants have the promise of a level of detail that takes a lot of time and work that we don't have the staff for. We don't need to know whether it's an aluminum frame door, pressed steel door, or a solid core wood door with what kind of panic hardware today. You don't need to know that. The consultants can do that, but they all have a different cost and replacement. They all have a different criticality. I don't think we need that level of detail. I have no sense, I guess we'll get workshopped on how much detail we're trying to extract from a $300,000 exercise. But the previous hundreds of thousands of dollars we spent so far trying to get all our buildings on the map and square footage in the base data isn't enough for us to be able to say we need this much into the long-term asset reserve. It's not enough data. Is this 300,000 the right level of detail? If we can't get a consultant, if we have people who are pretty familiar with their buildings, is there some in-between approach once we restaff the position and AG and others have support? Really nervous about putting $300,000 out into the consulting market and maybe getting nothing substantial this year, and whoever's sitting at this table next year will still be saying, do we have enough in our reserve? Because the public are criticizing our reserves. Is that the right approach? So,
Who wants to take that one? AJ?
Sure, through the chair, I can start with that. So of the building and facility condition assessments, which I think provided a lot of that $300,000 portion, the reason why we picked that number and specifically identified the library and the three direct facilities for about $60,000 each is if we just pick Aspegar. We did a roofing assessment. So we did a building and condition assessment back in 2020. And then we also had people do a building condition assessment, just specific to the roof. And we found out that the more surfacey the report is, the more generalized numbers we get. And the more detailed and cut tests that we did, the more we realized, oh, all these roofs are actually in a lot worse condition than we thought, and there's a lot more rot than we thought. And so I guess why we put those numbers in is there's certain facilities that we don't feel that kind of overall, this consultant coming in and doing general assessment of the building isn't sufficient to actually tell us what condition the building is at and the components in it to be able to confidently say what the reserves should be going forward.
So supplemental, if I may.
Yeah.
I understand the process because I've got into a lot of buildings or hired people to do that. I lack the confidence it's actually going to happen this year. This is $500,000 out of the gate, $540,000. Have we scheduled the costs in the right time frame? If we have to use a result, maybe bring a consultant on, not offering $300,000, hopefully maybe it'll be all separate. And you see how it goes, what kind of feedback level of detail you get, and you spread this out a little bit. Because so far, the consultants have always been late. But they put the money in their back pocket, and we have the tax for it and the whole. Should we spread this out and consider shifting the approach in year 2 or 3 if we're not getting the results when we need the right level of control?
Maybe add to it. So part of this is probably my fault because the discussion I had all along before we knew that our employee is going to leave was we were targeting to have results informing the 2027 budget discussion. So we are competing here in regards to bring something to you to foster your public discussion versus detail-oriented and very, very solid information. So I think to some degree, we will have to make a decision. If you say you're totally okay having information informing you for the 2028 budget discussion, then we can accordingly make sure we have very solid data that informs that. Or we can say we need that information for 2027, which is now knowing that we lost our employee, a very difficult thing to do. So there are these competing targets in a way that we try to achieve and that were difficult to bring together.
I'll go through the speakers list and then if there's more, Vandenberg.
Thank you. I think I'm just going to kind of add to the conversation that Director Jackman has pointed out, bringing forward. I'm going to back up. So to me, it's a matter of how is, and on there, we're talking about the rollout of the asset management plan. So my question is around the deployment strategy. You don't have the software, you have to evaluate the software. You have to decide what software is going to work. Okay, so that's a project in itself. Then to me, instead of going out and doing physical asset evaluations, you need to take the time to input all that into your software. So that's gonna take time, and that's more of a, I suspected that when you looked at hiring the level of sophistication this fellow was, that he would do all that or work with managers at our different assets, that sort of thing. So I'm wondering, can we not just spread this out a little bit? I don't understand. Well, you probably understand what the deployment strategy is. I'm anticipating what that might be, but it sounds like you want to do assessments kind of a little bit early, get the software, or get the assets into them, start working with the managers, make sure that that's correct, and then let's take a look at what the assessment portion will be. A lot will be determined by the entry of assets into the software. That will determine, the software itself will tell you probably what you need to assess. So RFPing that right now might be a little premature, I guess, in my limited way of thinking. So I'm just expressing to you how I see this, because I've done asset management work in the past, so.
Okay, and yeah, through the chair, thanks, that's a good point. And that maybe wasn't included in this report. So we do have now we have a list. So what previously hasn't been developed was a list of every location, facility, site that the RDCP either owns something, whether it's property or some sort of asset somewhere. So that has been created, and that's with GIS, our own internal GIS. So there's a transfer to GIS in the budget for this year. That's GIS's first task this year, is to basically get that put into GIS, into Esri, so that we can use that kind of as our source of truth sort of thing, that everything flows out from, and then everything's tied back to. So that's what's enabled us to say, here's all the building and condition facility assessments that haven't been completed, because we've now realized this site wasn't on a previous list.
To just clarifying, I think the list has been created, and that is what has been used to determine currently where we're at with that. I think the question I'm hearing is the difference between at what level of detail are we going and how do we quantify that?
That, and you're going to take that inventory, and then you're going to find out what software you're gonna run it on, and then you're gonna input it again.
And that's what you're referencing, is getting it into the software.
The deployment strategy, you thought about it, I'm sure, but it's not in, I don't see how you're going to. And I'm just layering on what the concerns that Director Jackman is forward as well. I see that as well. So.
You can go ahead if you have anything you want to add to that, AJ.
Yeah, and that's really where, I mean, so we do have kind of this 3-year roadmap that's a little bit more defined than this. But I guess that's duly noted in that we'll maybe need to make it more granular in its information, so that it clearly spells out where each kind of piece is happening as we go through it.
Page.
If I'm missing this, just cut me off and tell me I'm missing this, but to me, there's two things here. There's the level of specificity around the asset management planning per property specifically, and how that incorporates into our operations, and that is going to take years to develop the sophistication to do that and do it in a holistic way that is the same across the organization, and I support that work. And then there's how we implement and save up money within the budget to deal with those liabilities as they come off our books and come onto our books. Much of what we talk about in terms of surprising increases over time are really just things that were debts out there, and now they're showing up on our books as we realize that we can't put them off any longer. This whole work is about bringing that entire planning piece into our budget. So what I think we need to be doing on that second piece, on the budgetary piece, is assume that we're underestimating those liabilities already. Assume it's probably going to take 5 or 10 years of phasing in regular increases over time to get to the contribution level across the services that we're going to need, and start now putting some of those conservative estimates into our budget along a phased approach, and knowing that in parallel, we're going to be building additional clarity on the actual liabilities per building. And as we provide that clarity, there will be some cost savings, and there'll probably be more things that we didn't see in the first place, but at least we're starting the process and we're building up the framework of how our budget makes those contributions for the asset management, understanding that it's gonna take more time to get to the catch-up level anyway than to get to the detail level where we actually know the numbers, but we're not losing the time that we have, the opportunity we have now to start building those reserves, because every year we go and we do not build those reserves is just compounding the catch-up we have to do later on. So I just want to make sure we are not waiting for 2028 budget to start putting $200,000 extra a year into the budget, compounding from that point on. Let's start doing that now. And let's start figuring out what those broad pieces of the policy would be, and let's do it now, and it'll get clearer as we go down the road, and we will probably find we weren't clear enough in anyway. And if we do, great. But we're not gonna break the bank by starting to make those incremental changes, and we need to start now, in my opinion.
Yeah, and through the chair, thanks for that feedback. We'll definitely make sure that when we do the business needs analysis, that's included.
So I was next on the list. What I do want to there's two things I wanted to note. One is, so I recall asset management with our water systems because they were kind of first in line, and I got to see one for Woodbury. I did not have a conversation with staff about what that asset management metrics need to be. That was not my lane. My lane was what the numbers say. And I just relied on staff and the requirements under whatever regulations at that time. IHA probably had some influence on that to get to the, so what does the budget say? And I think I'm not going to say that anything that was said here wasn't. I think the more information we have, the more we dive into details that may be a bit outside of what we should be considering as a board. And so I think what's important for us is asset management's required. It's just required. How staff determine that is actually, and this is the other thing I was going to say, was as far as I've read, I believe there's actually asset management standards coming either from the feds or some other government entity that will indicate what are the standards you need to meet to determine your asset management. I rely on experts to determine this stuff. My job is the numbers and how we do those reserves. So I guess my question is, has staff heard about the asset management standards in terms of what you need to include to set that asset management reserve at? Is that coming? Is that anything you've had communications on?
You want me to?
Sure, yeah.
I know that there's some standards definitely on the utility side, and there's probably other assets too. I'm not sure if there's new legislation coming or guidance documents. There's various ones that were issued from various institutions, including Interior Health and whatever. But like I said, there is some provincial and federal level, there's documents out there. If they are being renewed, I do not know.
I think the point on that is just being clear about how detailed we get with staff and how much we just stick to the standard we need and leave it to the experts to figure out those details.
If I can add, and I agree with all the previous directors. I mean, we know from our utilities services side, this took us 10 years to get to a document that we had trust in, and didn't vary massively from year to year because we had new findings, new information, or found failing assets that we weren't aware of. So, and I expect this being the same or worse for an organization-wide doing this. So I totally agree. We need to get something in the system and refine year after year. You can get then fancy to risk assessments, to put additional importance on certain assets versus others. So all of these things you can do later on, but initially getting something, I almost had on paper, but in digital form on paper to start that process and that discussion is important. So I fully agree with you.
Okay, so we have quite a speakers list growing. I just want to check timing. How many more slides in your presentation yet?
These are the last two slides.
Okay, and then we have a motion that was added in, and that's it for the agenda. I'm just making sure we're kind of sticking to time. Okay, so we have Lockwood, Davidoff, Newell, and I just saw McFadden's hand. Lockwood, go ahead.
Thank you. Through the chair, so I understand the report tally. It shows how you have calculated what the budget's going to be. What doesn't make sense to me, and I'm going to use the Salmo pool, that it's $5,000, but Otishinia landfill is $4,000. So the reason I'm gonna use the Salmo pool is that, Salmo and Area G paid for a whole complete, for undercover to give us an asset of all of our stuff that is at the pool. So that's already done. We've done a whole bunch of work, and I'm not sure how that little tiny pool is asset management is $5,000, and Otishinia, which is so much greater, is $4,000. So I need to have a real understanding in how it come up with these kind of calculations when we've done a whole bunch of work already and we're still being charged that much. That is the one question. And the other question is who is actually doing the inventory at these individual places? Because I'm sure that we're not hiring that out. I would hope that we have staff doing that, and I'm just confirming. Thank you.
Through the chair, I'll maybe answer the last question first. So yeah, we've done up a matrix to basically say the more sophisticated facilities and buildings are done by consultants. Things that are less sophisticated or that are, say, parks or smaller sites are generally done with the asset management coordinator kind of overseeing or helping field staff undertake that inventory and assessment on a template that have been built in-house. As far as your first question, did you want to take a stab at that? Yeah,
Through the chair, I'll start, and we got Uli and Joe here as well. So we did on a black bed word struggle with this allocation formula, I think, for the better part of December, and I think we've come up with I think something that's reasonable. To try and speak to specifics, comparing a pool with a landfill. Most of the landfill related costs, long-term planning costs, are related to closure of that landfill. So you've got an expensive facility, but your actual asset management, you've got a scale shack and maybe a scale there, and versus a pool where you've got a lot of equipment. You've got heaters and chlorinators, and you've got a building and all sorts of those things. So you have more sort of assets, and the insured, we went with insured values. But the insured value of the landfill is relatively low because the assets at the landfill are relatively small, even though the operation is large. Its funding is more for related to long-term management and monitoring and closure of that landfill, which is a whole nother process and doesn't fall under the umbrella of asset management.
Yeah, I echo that. So the landfill liability calculation, it's not an asset management calculation, is done ongoingly. We have done for many years and are obliged to. So that big portion of the landfill is covered through the landfill liability calculation, and it's only the front end scale shack, and maybe a retaining wall, maybe a couple of bins that is easily assessed, and that's the portion that goes into the asset management.
Supplementary. I apologize for using the landfill. I'll use fire hall. I'll use something else that's got more of an asset. My point is that we have already done a bunch of this work and have paid for it. And I'm wondering how that didn't take into consideration. So if we're going down the road as what you're saying is that we're not looking at any of that work that we've already done and use that we're going to repay to have this all over again. So that is my point, is why we would spend $5,000 to get information that we already have in a major report. And I see that Joe's standing there, so I appreciate that maybe he can help me because
Stuart's gonna take this one.
Let Joe go first on that.
Okay.
So, through the chair, we're talking about a little bit, unfortunately, there's two things that are going on in this report, and we're confusing the two things. So there's one, right now, correct me if I'm wrong, but we're not reevaluating Salmo Cool. So that piece is that's a separate cost. So when AJ was talking about the $60,000 per rec center, for example, that was a cost that's directly allocated to the service of where that work is going. And then there's a cost for that basic piece of the administrative work that would be ongoing, whether we're doing those assessments, which we had scheduled this time, or which we've talked about. So that is the piece is that 5,000. So Diana, that 5,000 is not intending to duplicate the work that we had done by cover and that in 2020, 21, something like that. But the work that that 5,000 would pay for is putting that into a system, software that we don't have right now, putting it in a way that generates reports for us to include in a financial plan and to actually plan around. That is what that 5,000 is. And right now, because we're at the beginning, we have so many different things that we're layering on. I can understand how it can get confusing.
Anything else, Stuart? Okay.
Thank you.
Yeah, through the chair, one more comment on that. So that's sort of the best, I think, a fair allocation method we can come up with today. So as we gain experience through the asset management process, we'll be revisiting this allocation method every year. So it might look different next year once we see, you know what, we need to make slight adjustments here because this is a real effort required to roll out this next phase of the asset management plan. So that I think we need to keep that in consideration.
Thank you. Dr. David Opp.
Thank you, Chair. So I have two questions, Chair. First one, just on asset management. I've been asked by my constituents several times about, what's this asset management? How does it work? And basically what I've been saying, based on past advice that we received from staff, is I said, well, asset management is what it's going to cost to replace different components of a facility or an asset, whatever. And then they said, well, what is reasonable to set aside per year to do that? And it says every facility, every asset has a different valuation and things like that. But the rule of thumb that we've utilized is kind of 3% a year of the present value of the facility. If it's something brand new, a brand new asset, then it's 3% of the replacement cost. Is that 3% number, like, is that still reasonable as an average over the, the assets that we manage, through the chair? And then I have a follow-up.
We used in utilities, for example, 2% as an extreme rough estimate, but it depends severely on the type of asset you're looking at. You can have a PVC pipe that we estimate right now for 80 or 100 years, and you have a lower percentage, or you have a pump that might be failing after 15 years. So it is very asset specific. If you just want a back of a napkin calculation, the 2 or 3% can be a good crux, but it's not something I would do in a long-term asset management planning.
Yeah, just through the chair, just to follow up on that. And I guess this is why we need asset investment planning software. Is that, for instance, in resource recovery, we view essentially those attendant shops as an asset. They're basically disposable. They're good for 20 years and then we replace them. So what you should be doing is dividing kind of that total cost, 20 years. So if you're looking at, say, 5%, should be at least 5%, right? Because you're gonna need that capital cost in 20 years. At a rec center, it's totally different. I mean, that's like a 50 to 75 year building. So there's certain components of that building that you're maybe at 0.25%, because, you know, you're not gonna be replacing your foundation when your slab is off it. But then there's other larger components, mechanical HVAC, et cetera, where every so many years you're replacing them and they're $20 a pop, right? So hence just the need for that software to be able to kind of parse out, you know, each facility, what that number needs to be that's in that service.
Thanks, AJ.
And to add to this, it looks very different to cash finance versus borrowing. If you have a 25-year loan, you double your cost. It's just that simple. So that you can model with software, but with your 2 or 3% assumptions, you're not capturing that.
Your second question, go ahead, David Opp.
Yes, my second question is to the CAO. I mean, we have been working on asset management planning for a while and understand best practice, and this is something that we need to go to. I don't know, like we had MAG in our province, right? Municipal Auditor General, who used to look at all kinds of things and give recommendations and things like that. And I don't has that office now gone? Because I'm hearing talk that it may come back. And is there is there a possibility that either they reinstate a MAG, or could you see legislation provincially forcing us to you know, and a formula setting aside how much money we're supposed to set aside? I mean, in your travels through the chair to the CAO, have you heard any word about what MAG or legislation and actually formulas as to what we're supposed to set aside, and then we don't have an argument about this stuff and we don't have to go out there and sell an asset management plan? So that's my question to the chair.
So through the chair, I have not heard about the Auditor General's office being a topic of discussion to bring back. That being said, Asset Management BC is really the organization that kind of drives recommendations around asset management. They've got legislation in other provinces. Ontario has asset management legislation. That being said, I do not believe that legislation has a formula that tells you how much you need to put aside for a rec complex or for resource recovery assets or for a fire hall. The legislation would be around putting together a comprehensive program that balances the cost between current and future, essentially taxpayers, so that one group isn't carrying the burden all the time in terms of asset replacement. So I think it would be more generalized. It would not have a formula though. You could never peg a formula in terms of building a rec center in the Lower Mainland versus a rec center here versus a rec center in Fort St. John are completely different projects.
Yeah. Chair, can I ask the CEO another question?
If it's relevant to the budget, yes.
Yes. So basically, I understand the response and completely appreciate it. MAG in the past has kind of given examples. Is it possible for the CAO to circulate the Ontario legislation to us so we can understand what that could look like if it comes, and it might help us understand this a little better?
I'm pretty sure you can just Google that.
Yeah, I'm just saying, but I think I can Google it and I know it exists, but I'm just saying I should, can it just be sent to all of us? That's all I'm asking.
Yeah.
Okay, thanks.
I don't want it.
Thank you.
The one minus page. No.
I don't want it either. Can you please mute Jordan off? Thank you. Newell McFadden, and then we do have other issues to get to. So Newell, go ahead.
Thank you. I won't belabor it. It was touched on what's the ratio of borrowing to reserves. I have two questions. One is, would the budget line, through the chair to someone, would there be a new budget line instead of reserves that says asset management? I'm sure it's
Go ahead, yeah.
Yeah, through the chair, so the cost of administering the program is on a new line, so we've got a new line in all the statements.
Sorry, I meant within a service like Rec 5, we add a new line that says asset management instead of reserves.
Yeah, so through the chair, so there is a new line in each of those services for
Sorry, I missed that.
of asset management at the bottom, and then for the contribution to reserves. So it's a good point. We're going to have to consider how that's shown on our statements once we move down our asset management plan, whether we want to have different breakout contributions to reserves to different types, and whether it's a contribution to a capital reserve or to a different type of reserve, and that's something we'll definitely consider.
Last comment is, we all know all of our assets are underfunded. My understanding of having a policy would be to force services to contribute to an asset management plan as opposed to using reserves to go into operational. So this would just, we all know we're underfunded, and whether it's this amount or that amount's irrelevant. I thought the policy would more likely just force each service to contribute an amount, defined amount to that service, to that reserve or asset management plan. Thank you.
McFadden.
Great. Through the chair, just to touch on some of what my fellow directors have said is, I think we have to be careful that we don't wait until we have a perfect plan before we start paying for that perfect plan. And so I can just speak from like Cascade Rec, as I've heard for a lot of years, they talked about asset management, but they were not putting any money aside until they had a plan for asset management. And now here, even the plan that we did do isn't really to the degree that they needed. But we could have waited until we had this really thought through plan. And when a plan says like, you're gonna need at least $1 million a year. Great, we knew it wasn't enough. Let's just start there. But then the debate still was, but we don't know exactly if that's what we want. Just start somewhere. Like we just need to start putting money aside. We know it's going to be something. And we do need to be careful that we did put a percentage because again, different building types, that building type might change in 15 years. That becomes like, there's so many factors to when you need to replace something compared to just a percentage. And my last thought just on the contracted services is more of a question is, I don't know which direction, if you use the software first, you can be adding that in first before you go to plans, all of those things. But is there room to move within that amount of what you're using it for? So we clearly are gonna need a lot of money for asset management. That's not the question. So taxing for an amount that might be 300 and something, but may not use this year for specifically contracted services to get those plans. But we do know we're gonna need the software and we're gonna need someone to do that. Or is there room to move within that budget line for whatever those needs might arise if you determine that it might be different than that system that you're currently saying, which is we're going out for contracted services to do our fulsome plans on each facility. We can't find anyone to do that, but we do know we need X, Y, Z. Is there room in the budget to maneuver that money to where you might need it and still accomplish something if we haven't actually got to, like Director Jacqueline was saying, a contractor to do those contracted services? Does that make sense?
Okay. Through the chair, those funds are, if we're unable to get those services done by the end of the year, then those funds would be returned to those services, and then that surplus would be used to fund that work in the proceeding year.
You good, McFadden?
Yeah.
AJ, did you want to add to that? You don't have to.
No.
Cunningham.
Thank you, yes. My question is, what happens when a service or some part of a service ceases? I'm thinking about things like the Morning Mountain Ski Hill that had lots that was remained insured and so forth afterwards. There was no asset management plans at that time, but if there had been, when the service was closed and it was changed into what it is now, it's no longer a service or whatever. What happens to the money in the asset management plan?
I don't know. Do we need to deal with that?
That's probably a legal question, still.
Yeah.
Well, Morning Mountain is a specific example. I believe we had a service with matching tax base, and we were able to transfer the funds into that. I think regardless, if a service ceases to exist for whatever reason, no longer has any assets to manage, but has funds there, we would just return the funds to the taxpayers of the area. If there was no other use for the funds at all.
Okay,
If we were sitting on $100,000 in a service that ceased to exist, we would just do a negative taxation and it would be refunded to the participants in the service.
Is your question on the hypothetical or on the asset management plan?
Basically, assets is what I'm gonna ask. We have a contribution service, for example, the TV service. If that TV service falls down, we don't own the assets. What happens to the assets?
Society owns it.
Through the chair, that would be up to the society to deal with on liquidation.
So we don't have any control of their assets. Okay. Simple question, simple answer.
Okay. So we're about 4 minutes from public time and then we have a resolution to address. Is there any other questions? AJ, is there anything else you want to present to us or yeah, AJ on asset management, anything else from you?
Online.
Okay. Yev, anything else from you? You have one more slide.
Yeah, one more slide after the next one. I think we've gone through the budget, but it is the, Charlie, if you can move to and the next one. So just one last comment. We haven't scheduled the public meetings yet for the budget discussions. So we'll start that, reach out and start that process next week.
Thank you. Can I ask then, in terms of some of the feedback that we heard in terms of communications, is it fair to offer to the directors to send you and Stuart your thoughts on communication suggestions in advance of that? And then if there's anything super conflicting, we can address it a different way, but just some feedback. Is it okay just to email it to you, Stuart? Yeah, okay. Does that work then, directors? Okay. Okay, so you'll probably see a doodle poll or some ideas on dates and we'll respond that way as per usual. I don't know that we can do your motion in 3 minutes, Paige, so I think I might just do.
Sure. Well, we probably could do it.
Yeah, let's do it. All right.
All right, guys.
Yeah.
I'm just gonna ask first, before you move the motion, Carly, are you able to pop it into chat so that anyone in the public that's on can see the motion we're discussing? Thank you. And then public that are on the line, we're just gonna deal with this motion and then we will go to you for public time. And if you wanna go ahead and.
Okay, I'm gonna move a motion to send a resolution to AKBLG. I had contemplated this before, and specifically was inspired by the Unit 4 conversation, but there have been other conversations around how we're getting vendor locked in and how we need to have a more cohesive approach as a province and as local governments to identify areas where we could be developing our own software, group buying our own software, defining APIs or data structures to help transportability of data between software, integration with other kinds of software. And so this is really calling for UBCM and AKBLG to help co-develop with citizen services at the province, a working group that can identify some of those business needs and some of those overlaps so that they can make recommendations back on how we can achieve some lower overall cost of digital infrastructure in the long term, and that can show up in all sorts of ways. So hopefully that's supported. I was struggling with just figuring out an enactment clause that wasn't about a specific vendor that was going to actually address the issue in the long term. So I think a working group of career professionals across multiple local governments that can help identify those business needs and where we could be developing some of our own software so that we're delivering better services would make a lot of sense.
Are you moving the motion?
I'm moving the motion.
But
I circulated it to you.
Okay, so it's an email, it's on chat. I think we get into wordsmithing, save it for AKBLG. Overall intent has been described, further discussion. Was that a hand, Vandenberg?
Yes.
Go ahead.
Yeah, so, a lot moving there. It comes across to me. So I guess maybe my question would be, give me an example to illustrate, how well that you put it forward. Procurement comes to my mind. I hear citizen services. I hear working group. I hear getting involved in economic development, perhaps at a local scale. I'm not quite sure where this is going. And if you could have an example, you could illustrate what you mean, that might be helpful for me.
One way I would illustrate this, so say you have a work order system that integrates with your folios on your properties, and you have a custom vendor who's developed an entire process that they procure out to local government specifically to perform this particular business task.
if there's no data structure, if there's no like defined, normalized data structure on how that information is supposed to be stored and how it's all articulated, that if any local government goes down to procure another software vendor to develop a modernization of that software or to integrate that particular business logic into some other piece of software they've acquired, if there's no defined standard and there's no way that all the local governments are using the same data structure or the same API calls because nothing's ever been defined as part of that sector, then it makes integration and transportation of that data into another system completely customized work. And so then therefore you end up having these huge varies of cost when it comes to trying to implement that into a new system. And that's oftentimes where you see that you end up on something like Unit 4 as an example, but then which is an accounting software and it's an enterprise relationship management software, but you can't get your data out into another vendor who might offer you a lower cost of ownership because the data is all structured in a customized format, has been built over time and hasn't actually ended up into an organized fashion that in an organized way that other vendors could immediately understand. And that creates this inertia within an inertia in a vendor lock-in, which is what we're ending up in now, right?
So I need to caution us a little bit here. So first of all, let's just note we're doing a resolution to AKBLG, which will be redebated at AKBLG. Further to that, we're discussing this like we're computer experts and software experts. So we need to be cautious over the type of information we're putting in this and what we're discussing, that I understood 10% of what you said. So not saying you don't have to do this motion. I'm just saying the level of detail we're going to get to at this table, we need to keep it a little high level. Essentially, we're saying don't let us be ruled by software companies who get to dictate prices that are way above and beyond what we can do. Yeah. That's the essence of it. Vandenberg, do you need a supplemental? Please don't get into computer detail.
Yeah, just try to keep it simple.
Thank
Just
you.
to clarify, is this a opportunity for business to business, government to business? How is that relationship?
Okay, I have a better example.
Please be succinct as
I'll
possible.
try. Take your email systems. Email systems are defined on an open standard. Your Hotmail can talk to your Gmail can talk to your MSNBC, like it all integrates. You can set up your own mail server. You can use a big cloud provider. It's all because the SMTP protocol is a defined
Okay,
standard.
I'm going to cut you off there.
And it's open, but that means it's
Page.
portable.
The resolution says UBCM figure this out. So I think that's what we need to focus on. If they start a working group, that's where you get to that level of detail.
Yeah, the working group will work on that.
The working group is essentially to say, how do we do this? So we're not going to figure that out right now. I'm so sorry, but we cannot get so technical that we've lost the plot.
That's what it's but fair enough.
Lund, go ahead.
Sure, just quickly, speaking in support of this resolution, from a small municipality, I think a working group could also look at potential synergies and ways that small villages or local governments could work together, bulk purchase, whatever. So I think a working group with their eyes on this, on how we can be supported would be great. So supporting the resolution.
Thank you. I'm going to speak to it and just say that I also support it, but what I would recommend is when you get to AKBLG, you need to simplify it to a working group that addresses some of these issues. Because I can anticipate, as I did when I read it, what do you mean? So that would just be my advice. I don't have a problem with us moving forward with this now, but we might look at amending it at KBLG.
What else could pitch it?
Yeah. I appreciate your knowledge. I just don't understand it.
I know.
Not being clear here. Okay. All those in favor? Any opposed? Okay, that passes. And thank you, Director Page. And thank you, McLaren Co. I know you worked on that too. So we're going to go to public time. Is there any members of the public who would like to unmute and ask us a question? Asking again. I don't even see. So Valley Voice is on there. Observer. Okay. that would be it, wouldn't it? So we cover it all? Okay, motion to adjourn. Debate. Moved, seconded, approved. Good work.
I sent you a response.